take a look at the steel supply and the demand side. So during the first 9 months, China's crude steel output fell by 2.9% year-on-year to 746 million tons. And in Q3 alone, steep output declines in July and September largely contributed to Q3's overall production drop, as the right-hand side graph shows. Behind the decline was both BF and EAF mills strengthened self-discipline on production, as well as policy-led production curbs, as the right-hand side graph suggests. First, from the policy perspective, environmental production curbs and national steel capacity controls continue to limit steel mills' production levels. The steel producing hub Tangshan in North China lifted the 2-week-long environmental curbs.
What drove this rebound in Q3? Well, I think the main force was improved market sentiment, which is largely thanks to China's anti-involution policy. This campaign, which targets overcapacity and price wars, gave a boost to many industrial products, including steel and iron ore. And here I also list a few other key events that lifted the market mood and supported iron ore prices in the past quarter. For example, the launch of the 𝐼𝐸 hydropower project in Tibet and the extended tariff truce between China and the United States. Also, when the production curbs in North China were lifted after Beijing's military parade in early September.
Firstly, in the two charts on China's total coal supply here, separately for the first 9 months this year and 2024, I believe a decline in July this year is quite clear here. China's overall coal supply has moderated to 417 million tons in July, lower by 8.2% from the average level during the September last year to June this year, which was deemed as an oversupply period. And if you look at the chart on the right side, we'll find the coal supply started surging quickly from September last year, with readings thereafter staying at historical high levels, which basically explain the persistent price drops in H1 this year.
Now let's move on to the imports. Back in June, China's Ministry of Ecology and Environment has issued new regulations on ferrous scrap imports, aligning with the national standards for recycling iron and steel materials. And the regulations officially came into effect on August 1st, specifying that the ferrous scrap materials meeting the standards in this table can be imported without restrictions. And under the new rules, multiple categories of ferrous scrap can be declared under a single customs declaration, which wasn't allowed before, as long as they are clearly separated. However, the introduction of the new standards did not give any effective boost to China's steel scrap imports.
For the supply side, production in northern China may stay high, as local smelters would like to maintain their run rates high, given their relatively low-level production costs, while the output in southern China may decrease over November to December due to the high electricity costs. Proportion of silicon manganese output in Inner Mongolia may increase further, as more new capacity may be put into operation, with the competitive smelting cost of local smelters. Silicon manganese production in Ningxia may keep stable in the fourth quarter, with local smelters relatively low-level smelting costs.
Longer-term impact of anti-evolution efforts on the Chinese steel sector. How does China Mineral Resources Group involve in China's iron ore procurement? And how much, if any, has CMRG and BHP negotiation contributed to the recent iron ore price rally? And is it sustainable? The impacts of anti-evolution on China's coal supply, is it expected to see a meaningful share increase by next year? So first, we know that Chinese steel producers have been responding
actually, these rumors did push iron ore prices
the meaning of phasing out outdated and surplus capacities and guiding markets.
And the single biggest constraint is the persistently tight supply.